Now, when the market takes a breather from all the selling, we think that our favorite stocks are going to the moon. And there is no harm in being and thinking positive. But blindly following your gut feeling or blindly following a YouTuber, doesn't matter if it's me or someone else, is never a good thing. So in this video, I'll share some tools and few things that you should watch out for and keep in mind before you decide it's time to make that purchase. I'm sure it's hard for you to believe, but sales are everywhere, from big names to small names, from growth to value. No matter where you look, you will find some great buys. Tesla, Microsoft, Amazon, Google, all are amazing stock and companies. So let's explore a few things that I'm personally looking at before deciding on jumping back into the market. So over the past few weeks, I sold few stocks to save some cash on the sidelines because I do want to make few plays. But I'm watching and waiting for few things to happen. Take a look here. So this chart that I'm showing you on your screen will look like an image or a mirror image or a reflection, as you can say, because the way the chart is going. But it's actually not a reflection. So on top is a VIX index. At the bottom is S&P 500. And this is all the way from 2020 to now 2022. So you can see that anytime the VIX has gone up, the S&P has gone down, or actually the other way around. Anytime S&P has gone down, VIX has gone up. And it has kind of traced it like a mirror image, if you can see. But one thing to note here is that any time that has happened, and I'm only going to kind of take in account for this huge spike that we saw right here, and I will expand on that spike. It has not lasted more than 10 to 12 days. After 10 to 12 days of high peak volatility, things have settled down. And when I say high peak volatility, I'm talking about when the VIX has crossed 30, or I would say 25 to around 35, in between that range. And as you can see, VIX has really gained the momentum and market was very volatile. So you can see that market was volatile. Things were looking really, really bad, that we are not going to get out of it ever. But then it lasted about 10 days. And then after that, the volatility decreased and the market improved. And since then, we have seen, of course, S&P go make newer higher highs. Now, we have established how closely VIX and S&P trade. As you can see, anytime that S&P has gone down, VIX has gone up, S&P has gone down, VIX has gone up. And the same thing is true even now. VIX is, of course, trading in a very high level right now. Around 29 to 30 level is pretty high for VIX. But it is nothing as compared to back in 2020, March of 2020, with the COVID fear. VIX has actually touched 90. Just think about it, 90, and we are right now in 30. So you can see the difference, that market was a lot more volatile back in 2020 than they are right now. And if you put the chart, you will see that we are still about 30% up from the pre-pandemic level. I'm not even talking about the March of 2020. I'm talking about in 2019. We are still about 30% up from that time. And from the pre-pandemic level, some of the stocks and some of the markets are actually 93% up. So you can imagine how aggressive growth we have seen in the markets. So now we have established kind of how closely VIX and S&P are related, as I mentioned. But let me share something else with you. And this data will be really interesting on how it's going to play. So take a look at this. This is call and the put volume. So top is a call and bottom is a volume on S&P 500. And as you can imagine, we saw this huge market sell-off on Monday. At that time, there were a lot more puts that were issued as compared to calls. That means people were really freaking out that day that, you know what, market are going down and there is no recovery. But it's not the first time that has happened. Look, on December 3rd, we had that huge volatility in the market when people were like, stocks really went down big time. And as you can see, this is December 3rd right here. We dropped all the way from November when everything was looking good. And all of a sudden we realized, you know what, no, markets are overpriced, stocks are overpriced, valuations are crazy. Everybody started to come out and start give those predictions. So we saw that drop, and this is December 3rd right here. I put a line here. This is December 3rd. And on December 3rd, we saw a huge put volume come in. This is the highest put volume on December 3rd that has come in, along with the call volume. But now, if you move past that, we see a lot more put issued as compared to calls. That means people are a lot more bearish right now. And this could be very short-term puts. I'm not saying these are a month or 2 months or 6 months out. This could be very short-term, could be weekly puts. But a lot more puts has been issued, 0.992 million puts as compared to 0.892 million calls. That means a lot more put action happened in S&P as compared to calls. But look what happened. After December 3rd, as you can see over here, we recovered right here. Even though the put were issued were as high as now, we recovered from that. So anytime we have seen seen that huge overreaction of the market, we have always recovered afterwards. So when we say that the market is crashing, it simply means that people are getting out of the stocks, but simply to buy it back in at a later time. No one has a better use of money than market itself. I mean, for most of us, we are not going to take the money out and keep it in the bank for a long time. We are going to keep it maybe for a few days or few weeks or few months maybe, but the money is going to come back into the market. Usually anyone who pulls money out from the market, the intention is that the money is going to come back in when the things improve. So when will things improve? Let's take a look at this chart right now. So this is a S&P drawdown, and this is what's really amazing. So what drawdowns are, they are basically the money that comes out of the market, and usually those are the retirees, those who are the funds, they don't want to invest back into S&P. They have better use of the money. As I just said, that sometimes people take money out to put it back into the market, but sometimes drawdown happens that they don't want to put money back into the market, and this is the chart for the drawdown. So we have seen a peak drawdown. 3% drawdown is very common in S&P. As you can see, this is all 3% drawdown. The chart that you see, anytime people have taken the money out, this is all 3% drawdown. And if I put a line here, you can see that it's very common. This is from August of 2021, and you can see that people, even though the market was doing good, but people were still taking money out, which is very common in S&P. But what has happened now is, look what happened. The drawdown is really crazy. That means the money just went out of S&P because people don't want to deal with S&P and those high momentum and high growth stocks, and they took their money out. But what's interesting, if you pay attention over here, is anytime the money has came out of S&P, you see a V-shaped recovery everywhere, anytime you see, except this one time where we had in November when the money kind of stayed out of the market for longer. But what's happening right now, if you pay attention right here, is that money is not coming back in. It's not a V-shaped recovery anymore. That means people are scared of putting money back into the market, and they are waiting for, I would say, a total U-turn of the market before they decide to put money back in. So this is very clear from here that, people are not very eager to come and jump back into the market. That's why you see the fake rallies all the time when we look or we think that the market is going to change and everybody is going to come back into the growth stocks or momentum stocks, but it doesn't happen, and we see more red days following that. So it's amazing how market sentiment can change in 1 hour. These days market will look like it's going down in straight line, but then all of a sudden we get a wave of green out of nowhere. But don't be fooled by these bounces, and take advantage of these bounces to get out of your options, if you have options, and especially short term. And also some of the stocks that you don't believe in anymore. I feel when we have losses this deep, there won't be a V-shaped recovery. It's more like a U-shaped recovery, and the chart are also pointing in that direction. So in my opinion, we are not going to miss the opportunity. We might not be able to catch some of the stocks at the very bottom, but who cares in the long term? No one can time the market, and we can do is we can time our trades. In my next video, I'll share a few names that I would like to add once the Fed clears us, and today we will get some news today, and let's see what happens. Everyone is expecting at least 3 to 4 rate hikes. Anything more, market will have a knee-jerk reaction, but just think of it this way. This knee-jerk reaction is not going to last for too long. Look what happened with Microsoft. Microsoft's initial reaction was, oh my God, their quarter is not good, Azure is losing ground, but then on the conference call, they really changed things around, and now Microsoft is up almost 3 to 4% when I'm recording this video. So it's really interesting how things can change. Don't go by the headlines right away. These headlines are AI generated. These are machine generated headlines. Don't pay attention to the headlines. Look at the numbers, listen to the conference call, and then make a decision on what's going to happen. Tesla is supposed to report today. I've been waiting on the sideline. I usually play Tesla very aggressively before the earnings, but this time market condition just didn't allow that part. So I'm waiting very patiently on the sidelines to see what kind of plays I will make on Tesla. I will be making few plays today actually, and I will be posting it on our Discord, what I'm trying to do with Tesla to kind of take advantage of this high momentum and of course high volatility time in of course Tesla stock, which is always the case with Tesla. And then when we get the enthusiasm back in the market, which could be today or in a week or in a month, nobody knows, is the time when to go all in into the market. Hope I provided some value. Please consider subscribing and hit the like button. For more buy sell alerts and also one-on-one conversation, consider joining our Patreon and Discord. Links are in the description below. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.